I'm Bob Preston, the CEO of
Hey, welcome everyone to tonight's live webinar. I am the CEO of Climb Capital, and my name is Robert Preston. We're going to run this webinar slightly different than maybe you've experienced in the past. I'm obviously live right now. In a minute, we're going to cut to a pre-recorded portion of the webinar where we're going to go into the details of our Campfire Fund, which we're excited to share about. And then at the end, we're going to end with a live Q&A time. So at any point as we're going through the webinar this evening, please feel free to type that in the chat box and we'll make sure we'll answer those questions at the end. Also at the end, I'm going to go through just some highlights of our newest deal that is not part of the pre-recorded part here, but that I'm super excited to share about a park that we just put under contract a few weeks ago and are in the process of purchasing that. And so with that, I'm going to turn it back over to the pre-recorded part, and then I'll see you in just about 10 minutes.
Here's the disclaimers. I'm not an attorney and I'm not a CPA. However, I've spent almost a year traveling the US in my RV. I own and manage 9 RV parks, and on the last RV park that we sold, we tripled that investment. So if you have an RV park question, ask me. But if you have legal questions or want to avoid the IRS, ask your attorney and CPAs. This is an investment. This is not a loan. There are no guarantees, and projections and figures are estimated based on the market data and our experience. The Campfire Fund is an SEC-registered Reg D 506C real estate investment fund with a total capitalization of $20 million. The fund is buying RV parks across the Sun Belt of the U.S. We use leverage to purchase $65 to $75 million in RV park assets. There are 2 investment classes that you will choose from. Our B1 yield class has a projected 11% cash flow, and our B2 equity class has a projected 15 to 20% IRR. When stabilized, distributions will be paid out quarterly on a quarterly basis. Investors will participate in tax shelter strategies, and there is a 2% acquisition and 2% asset management fee paid to the sponsors. The status quo for real estate investing has become stagnant, but that's changing, and I'm excited for this new opportunity. You're probably familiar with this strategy. Buy an apartment complex, do some perception upgrades, raise the rents, reduce the expenses, refinance, and repeat. Or maybe you've heard this one. Buy a commercial property with triple net leases and never lift a finger again. Both make sense. People have to have a place to live, and triple net tenants pay all your expenses. But here's the problem. Just about everyone knows this. And with all the competition, prices have gone up, margins have gone down, and finding a great deal on an apartment complex or commercial real estate is like finding a needle in a haystack. Now, add the rising interest rates, and you've got that proverbial needle that broke the camel's back, or something like that. RV parks themselves are no short-term fad, or bump in the road, pun intended. The RV Industry Association, or RVIA, says that last year, the RV industry was responsible for $140 billion of economic impact to the US. In the past, passive investments in RV parks simply didn't exist, and even today, funds like the Campfire Fund are relatively rare. This means, relative to other commercial real estate investments, the competition is currently limited, and we can regularly find great deals, and since there are still sizable margins on these deals, we are generally unaffected by rising interest rates. Right now, there is a real opportunity to invest in RV parks before competitors flood the market, but that window is quickly closing. That's why we believe in this fund, and we strongly urge you to consider it as well. Why RV parks? Well, first, they have a diverse customer base. RVIA says that there are 11.2 million RV owners. Of those 11.2, half are above the age of 55, and obviously the other half are below the age of 55. Interesting enough though, it's not the baby boomers that are growing fastest, but the younger generation, with 22% of the market falling in the 18 to 34-year-old range. Secondly, they're recession ready. Let's address what most of you are actually really here to find out. You're wondering, how safe is this investment? What happens to RV parks in a recession? And aren't these a luxury item? Here's some interesting facts. During the 08-09 Great Recession, sales of RVs plummeted down 60%. From their peak in 2006, it took retailers almost 10 years to recover back to that same unit sales mark in 2006. During that same time though, KOA, Arvik, and the national parks all reported either equal or a slight increase in occupancy of those parks from 2008 and 2010. In fact, if we look at the early 1980s recession and the 2000 recession, we see the exact same trends. The sales of RVs plummet, however their usage and occupancy of the parks themselves stay essentially the same. I argue and predict that this recession will have little to no effect on our occupancy and that rates will actually increase, and here's a few reasons why. First, RV sales have skyrocketed leading up to this year, 2023, meaning there are more RVs in the driveways of our customers. If you couple this with the proliferation of RV sharing websites like Outdoorsy.com and RVshare.com, that means that more people can afford to own the RVs, and then those RVs are being used by the owners and the renters, meaning more nights sold at our RV parks. Interesting enough, last year, one of the top complaints by RVers was the unavailability of sites to book at parks and their overcrowding. Baby boomers add to the retired demographic at a rate of 10,000 people per day. Millennials have proven to be huge fans of RVs and outdoor activities. Remote work, housing unaffordability, traveling professionals all support a strong foundation of long-term RV customer demand. Vacationing via RV is approximately half the cost of a comparable hotel-based vacation, and data shows that most people still go on vacation during recessions. They just choose more economic trips. Industry fragmentation. Remember back in the early 1990s when you started hearing about mini storage and you started seeing all these long metal buildings with hundreds of doors on them? Well, at that time, there was very little information available, and most of the owners were mom and pop investors looking to make use of vacant land. CoStar didn't have any great data, brokers weren't specializing in them. In general, there wasn't much sophistication. But look at their proliferation and success now. As I see it, RV parks are a lot like mini storage or even apartments, in that they're following the same predictable industry progression, making them the next booming asset class. Versatile revenue streams. As an RVing family, Misty and I often load up the 4 kids, 2 dogs, and what feels like a year's worth of supplies, just in case. And then we head out. On one of our very first trips, we stopped at a great campground seated beside a beautiful lake. And of course, the kids wanted to go fishing. And of course, in our extensive packing of supplies, we had forgot the fishing poles. Convenient enough, the campground sold fishing poles and crickets as bait, of course. And then they sold us more crickets when the kids left the cap off the cricket cup. And of course, they sold us some ice cream that the kids saw while we were buying said fishing poles and bait. And after a great day of fishing, Misty and I wanted to enjoy a relaxing campfire on our folding chairs. And by now, it's probably no surprise that we had also forgotten the firewood. But don't worry, as luck would have it, the RV park also sold firewood. In fact, they would deliver it to our site. And by the end of the trip, we had spent almost double what our original bill was intended to be on extras. And you know what? We were happy to pay it because you can sell and put a price on firewood, fishing poles, bait, ice cream, but at the end of the day, you can't put a price on quality family time. Exit flexibility. When you own a single asset, you're limited in the ways you sell a property, and you're limited in who you could actually sell that property to. As a fund, the Campfire Fund will be a lucrative target to an institutional buyer, and we can expect to see a premium for a well-curated and managed portfolio. Most of the parks that we buy fit in a typical buy box. They're located in warmer climates for year-round operations and close to interstates for ease of access and increased customer demand, and generally have some type of water feature. This allows us to implement a predictable and phased asset management approach. First, we do cosmetic and perception upgrades. These upgrades can actually be fairly extensive in the form of new pools or clubhouses, or could be quite as simple as landscaping and new signage. Secondly, but generally simultaneously, we optimize the management and operations of the RV park. More often than not, the previous owners have neglected the power of social media, websites, online booking, and reservation management systems. One of the easiest things we can do is simply put the park's cabins on Airbnb. And instead of forcing customers to find the rentals on an obscure website, or even worse, to have to call in the book, Airbnb and VRBO exposes our cabins to millions instantly. In fact, it's not uncommon for us to increase the park's revenue by 20% the first day of ownership, simply by changing the daily rate and implementing dynamic pricing. And here's a stat that I'm really proud of. Our property management team has averaged a 67% increase in our year one revenue over the previous owner's revenue. Thirdly, many of our properties come with acres of unused land that is prime for expansion and development. Because we are expanding an already existing park, entitlements are easier to obtain and return on investment goes up. The clubhouse is already built, the pools are already built, and the major infrastructure is in place. The construction cost of adding those additional sites goes straight to the bottom line. Of course, all of our exit options still exist at the single park level. We can sell that park, we can refinance that park, or we can again couple this park with multiple other parks and sell and refinance the park as a portfolio. Some of you may have heard our story, but we started out with mobile home parks and Class C apartments. Over the years, we have hired and fired many property management companies. And through our frustrations of dealing with their incompetence and apathy, we came to the realization that we had to bring management in-house, and thus Altitude Property Management was born. Because we're the owners and operators, our philosophy is a little bit different. Resume and experience, as important as they may be, are not great indicators of success. We found that a better indicator is character and drive. We craft our hiring process around finding our next partners, not our next employee. That decision has set us apart from our competitors and has proven to be very successful. Here's a quick glance at our current portfolio. Parks in black are parks that were owned before this fund existed. Parks in blue are owned by this fund, and parks in green are parks that will be added to this fund in the near future. It may be cliche, but the strength of a business is its people. Building off of our management and hiring philosophy, Climb is composed of driven entrepreneurs with character forged in mostly military aviation. So to recap, the Campfire Fund is a $20 million fund that will purchase and operate 10 to 20 parks across the Sun Belt of the U.S. The fund will be managed by myself and the Climb Capital team. We bring the operational excellence and experience needed to run this fund. RV parks have proven to be dependable investments over time, but as the RV market begins to consolidate, that window of maximum opportunity is quickly closing. There are two ways for you to be a part of this opportunity before it's too late. Our Campfire Fund's preferred equity yield class with 11% preferred return, and our B2 class with a 7% preferred return and then 60% equity of the entire fund. Most investors choose to do more, but the minimum for either class is just $50,000. Investors must be accredited and may use retirement accounts, trust, corporations, and personal funds to invest. If you fit this criteria, you are eligible to invest in the Campfire Fund. But since we are a relationship-based company, we want to make sure that we are a good fit for each other. Here's what you need to do to take the next step towards being part of the fund. Simply reach out to us, express your interest, and if we haven't met yet, we'll schedule a quick meeting and make ourselves available for any specific questions you may have. Then we will give you online access to our investment portal where you'll be able to execute and view your investments. Investments spots are first come and are limited. The big opportunities in RV parks are right now. Contact us, get started, and thank you for your interest. Here's the disclaimers.
Okay, thank you for listening through that part of the recording. As promised, I wanted to jump in and talk about our newest property that we have under contract. It's obviously not part of the presentation there, but it is called Johnny's Lakeside RV Resort in Foley, Alabama. And so let me share my screen real quick. Really excited about this property. Here's a few reasons why. Obviously you can see it's got a great amenities package. It's actually 194 sites, and then it also comes with 59 storage units and 4 acres of commercial property on a 4-lane Highway 59 intersection, which is major thoroughfare running from north to south from I-10 down to the Orange Beach and Gulf Shores area. This park we found basically off market because we had bought a couple other properties from the previous owner. The present owner contacted us and said, hey, would you like to buy this park as well? And so really gonna kind of, we're really excited about this. Quick view on the map. It's right over here in Foley. Just for reference, this is Pensacola on the right side, And then, of course, over a little bit farther on the other side of the Mobile Bay is the city of Mobile. You saw a lot of the images that were the B-roll in the previous video were taken at this property. We got a lazy river, we got a zero entry pool, we got water slides, we got a huge event center here capable of holding almost 300 people, and of course the 194 sites. There are a couple small tiny homes on there as well, and we're really picking this one up at a steal, in my opinion, at $5.1 million. We've got the debt secured. We're actually waiting for the appraisal to come in, possibly even today, tomorrow, but we're expecting it to. The appraiser has told us to expect the appraisal to come in about $6 million just for the RV park, and about another $700,000 to $800,000 for the excess land parcels coming there. So this is a very good example of the type of properties we are looking to buy and put into the Campfire Fund. This will actually be our 5th asset into the Campfire Fund, so rounding out about a third of the parks that we think that we're going to put in the fund. So again, our capital raise is also matched that. We're right about a third of the way through our capital raise as we target that $20 million. So obviously a couple slides you saw in the presentation where the B1 class is fully subscribed. So that is done, that's out of the way, and then we're quickly filling up the B2 class. So with that, if you have any questions, please type them in. Otherwise, I would like to share one other thing. If you happen to be, I know this may not apply to a lot of people, but if you happen to be in the Pensacola area, June 15th, we are hosting a dinner for investors and potential investors. It'll be at the district, and it's going to be evening, basically food, beverage, entertainment. We'll have a small presentation about the Campfire Fund and about Climb Capital, but it's really all of our team members will be there, just an opportunity for us to get together and have a good time. And so with that, if you guys don't have any other questions, I'm going to throw up this contact us slide for a few seconds and let that play out, and we will look forward to talking to you. Please reach out, scan that QR code, schedule a meeting. We'd be very interested to share about the fund, about the properties. We can dig into the specifics of any of them, but really evaluate how the Campfire Fund is a great investment opportunity for your capital.